We have a lot to discuss today about the Clarity Act because it seems that there is a massive showdown happening at Davos, at WEF. And we've got people like Brad Garlinghouse, Brian Armstrong, Trump, the U.S. Secretary of Treasury going after Gavin Newsom. It's just a lot. It's a lot to cover. So we're going to get into it because the topic about yield keeps getting brought up. And there's even people from the White House that are coming out saying it's not that serious, when in reality it is that serious. And the reason why it's serious is because we're seeing, crypto and Bitcoin was created for the people, by the people. And the reason why it was created was out of the financial inequality that we're seeing on a global scale. In addition to that, we are seeing it was created out of the 2008 housing crash. It was a very, very terrible time in America. Again, I know many people that lost their homes, just average people, lower middle class people. So Bitcoin was created to combat that. And then crypto came, and it's supposed to be for the people, by the people. Okay. And I know that a lot of people say crypto is a scam, blah, blah, blah. That's fine. You can say whatever you want to say about it. But reality, crypto is an extension of the stock market. And that is what it is, okay? Traditional financial systems, I don't know what's a bigger Ponzi scheme, healthcare, traditional financial systems, insurance, I have no idea, but it's a lot. And now we're in this brand new era where we have crypto and we have a DeFi, and we have the potential to earn passive income. It doesn't matter if it's $20 a month. It doesn't matter if it's $60 a month. We have the potential to earn passive income on our stablecoins, which will eventually be converted, which will be eventually be the equivalent of fiat currency. Okay. That's what's happening. We're getting a CBDC. It doesn't matter what anybody says. And if we want to earn a little bit of yield, we want to earn a little bit of yield. And the funny thing is too, this one is from X. I'm going through my tax stuff right now. You know what the crazy thing about it? I'm not going to tell you how much cash, because I do cash out a lot of my crypto. You guys know I take profits. But I got a statement from my bank for one of my business accounts. And it is it's a form 1099 INT. And you have to report yield, interest you get on your savings accounts or any accounts. And I'm not going to tell you how much I have in that account, but you know how much I got back on my interest for one of my business savings accounts, or I think all of them combined? $33.77. That's what I got. That's what I got back. And I have to report this to the IRS. For me to scan this piece of paper, send it to my CPA to go through it, to record it, and then send it to the other CPA that files, it's going to cost me way more than $33.77. Okay. Moral of the story is $33.77 is absolutely pathetic that I'm getting back with the amount of money, with the amount of cash I have in my business accounts, my personal accounts, all the accounts. It's absolutely pathetic. And what they want to do is they want to even remove that $33.77 from me. So I get zero back, zero interest, zero yield back. That's what they want to do. Okay. That's exactly what they want to do. And it is a big problem. And some people might be listening. Oh, that's not a lot. You sound poor, blah, blah. Guess what? Inflation is crazy right now. People can't afford homes. People can't afford basic necessities like food or energy and housing. Our homeless population in California is out of control, okay? Where this younger generation is having an immensely hard time being able to just afford life. And we could talk about that all day long. There's a lot of little caveats there. But the moral of the story is there's some people where that $33 a year is a lot of money. That might be a subscription service for them that they just want to get Netflix for their kids or something. You know, that's that 30 bucks you could take your family out to In-N-Out. Something very, very simple. But to some of us, to some people, they don't see that as a lot of money. To me, I see that as a lot of money. And the reason why I see that as a lot of money is because I had to work my behind off to get from off of the streets to where I am today. And the reason why yield is such a big problem is because it is further, it is the public servants, it is the banks, it is the ivory towers, it's all the elites over at Davos that want to further take from you. And there's people that say, oh, well, you know what, we can switch this in the future. No, you're not going to be able to. Because first and foremost, how many of you are out there doing something about it? How many of you wrote to the president, to Congress, to Senate, to just your local mayor? How many of you have done that? Probably not many. And that's not a slam on anybody. My point is, we want to make sure we get a good bill. And another thing that people are bringing up is the idea that we want to get this through. We want to get this through as soon as possible, just in case the other party that was the anti-crypto army comes back into power. And I understand that argument. I understand it very, very well. But at the end of the day, you get, so you're rushing something and you get a bad bill that restricts you the same way the other party would. Because again, the crypto markets are going to have a very hard time turning around if we don't get protection for developers. Samurai Wallet, Tornado Cash, did nothing wrong, created code. Code was used. People did bad things. A small minority did bad things, so they got in trouble. That's what the problem is they continue to take away from us and to strip us from our rights. And I'm telling you right now, we're not getting the Accredited Investor Act. That's not getting modified. No one is even interested in talking about it. It's not their problem. But all these people that are pushing for laws and regulations are accredited investors or are institutions or banks, are those that small group of people in the United States of America that is able to get special products and services and better deals. That's what the issue is. Because they not only don't want to remove your yield, which is, $40 to somebody, maybe, I don't know, but they want to restrict you. They want to keep that wealth gap going. In America, we got a lot of social issues. That's what I keep seeing on the internet. But in reality, if you go outside and you talk to people, people have access to more money, to more wealth, or a pathway to make more wealth. A lot of these social issues aren't going to matter as much because they're going to be able to afford better products and services. And the social divide is not really going to be there. It still will be there because social issues never go away. There's still nasty people out there. But at the end of the day, a lot of it dissipates when people have access to more money, because they're not going to have time to be sitting on the internet complaining about X, Y, and Z or finding all these pessimistic things to pick at. So this is a very important thing, in my personal opinion. But who am I? Nobody important. Now, let's get into the news. There's a lot to discuss, okay? This is Miss Hester Peirce. We're going to go through. There's a lot of stuff. Before we do that, shout out to all of our channel members. Thank you so much to Lawrence for the $10 super chat. Shout out to Mike. Shout out to Dale, to Mr. Legend, to Everett, to Cherry, to Gumby. Let me see. To Callie, to Mr. R, to MJ Guzman. Hold on. To Gamer. Let's see. All right. Let's go ahead and get into it, okay? Let's get into it. All right. There's a lot to cover. Lot to cover. All right. So this is the first. This comes from Hester Peirce. Okay, and we're going to be speeding some of these up because it's a lot to cover.
On the market structure bill, and just get your view as an SEC commissioner on if you think it should move forward in this current iteration.
Well, again, that's above my pay grade. I think that there are a lot of really smart people in the Senate working on moving things forward. We're excited to see it move forward. It is important to get all the pieces right. There are a lot of very difficult issues here that people have been trying to figure out how to deal with, and I think it's good for people to take their time and figure that out.
This is probably the most important piece. And this person's stupid. I don't even know who this person is, but they're stupid. What she said is incredibly important, okay? And it's a very simple concept. She says they're hammering out the final details on the Bitcoin market structure, but not to rush things, all right? Decisions on progress are above her pay grade. It's up to the Senate. She's excited to see things move forward once all the pieces are carefully considered. She supports taking the time to get it right. Now, I was lucky enough to meet with her in person. And in person, she said, our issue is not having the proper disclosures. But she's very much for a free market. But she's very concerned about having the proper disclosures. And she also, in this clip here, she talked about taking her time. Not necessarily her time, but people taking their time to do it right. Because you don't want to sacrifice freedom or liberty. And she's 100% right. And it is above her pay grade. Because she's not in the Senate. And she's very smart with her words here. So Hester's always been team crypto, team Bitcoin, team free market, team non-corporate capitalism. She's been all of that. So it's interesting to hear her take because she sees a lot of things that happen behind the scenes and people like Brad Garlinghouse and Brian Armstrong and Larry Fink and all the bigwigs. This is Mr. Brad Garlinghouse.
It is a classic dynamic of when you create new law, it's never going to be perfect. And I think what's the dynamic within the industry and working with Congress has been kind of, I subscribe to the idea that perfection is the enemy of good, and you can't get to perfection. And so I think Brian's exactly right. We're as close as we've ever been.
This is the problem, okay? Ripple's business is for institutions. Brian's business targets retail and institutions. I appreciate what Brad Garlinghouse and Ripple has done for the entire industry as far as fighting against the unjust actions of the previous administration and the anti-crypto army. I don't agree with him here. He doesn't care because it doesn't impact his bottom line. When he was attacked by the SEC, they cared because it impacted the bottom line. The crypto market structure, the way it is, they're servicing institutions, so they don't care about retail. Yes, you still have XRP. Yes, you can still make money off of that. But the people that are going to be using Ripple services are institutions. That's what they're building. They're working to fix the banking issues that institutions are currently facing for now. Now, will they service retail? Possibly. But he's right. He's right in the sense we're not going to get perfect structure, but we're not asking for protection. We're not asking for perfection. We're asking for a level playing field. They talk about protections all the time, all the different scams that do happen in crypto. And that's, you accidentally plug your MetaMask or whatever into the wrong, to something malicious and you get drained. They want to stop stuff like that, but they don't want to give us equal access. Okay. And the way that you protect consumers is you provide rules and regulations you provide guidelines of what people can and can't do, to what companies can and can't do, and that companies have to be held accountable. And you say this is made in America, and these companies get to operate the way that they need to operate, and users can use a platform and have some sort of protections. That's what a level playing field is, and that's what equality is, not removing yield and not making provisions in a bill that harm DeFi, harm the growth of it, and also harm the ability for developers to create, because that's what's happened in the US. And a lot of people are like, why didn't we get altcoin season? Why didn't we get altcoin season? A lot of the top 20, a lot of the top 100 cryptos saw really nice moves. XRP pumped from like 50 cents to $3. HBAR from 4 cents, whatever it was. What was it? 20 cents? I don't even know. We saw 4, 5, 3, 4, 5, 10, 20 times gains. We haven't really seen a brand new sector pop off or a new narrative because you cannot create in the United States of America without fear of potentially being investigated or getting in trouble for something. That's exactly what happened in Samurai Wallet Dev. So why would people want to build here? And that could be what is halting altcoin season. Brian and Brad and the other guys don't care because it doesn't impact their bottom line, because we're not their target audience. And that's why Brian is speaking out about the yield, because that does impact his bottom line, because he wants to be the biggest crypto exchange in the world. He wants people to use Coinbase for yield, for safe yield, as opposed to going overseas or opposed to going to a different exchange. That's what he wants to do. But at the same time, Coinbase also offers a lot of institutional services. Now, this is from Patrick Witt, and I had to make a comment. He says, no bill is better than a bad bill. What a privilege it is to be able to say those words thanks to President Trump's victory and the pro-crypto administration has assembled. But let's not kid ourselves. There will be a crypto market bill, structure bill. It's a question of when, not if, assuming a multi-trillion-dollar industry will continue to operate indefinitely without comprehensive regulatory framework is pure fantasy. We're not saying we don't want framework. We want $40 a year on our yield, $50 a year. We do not want to go in. We don't want to go from crypto and merge over into traditional finance and keep getting screwed. That's not what we want. We're not saying we don't govern us. We're compromising here. And I says, you're not wrong. But at the same time, this is retail's chance to actually be able to get ahead. And it's really sad watching public servants continue to take more from us. And that's exactly what's happening. They are continuing to take more from us. I'm not saying I have to love every single part of the Clarity Act. Hell, they're not removing anything that has to do with accredited investors. That still stands. And that's predatory as hell. But we're asking for basic yield. We're asking for pennies on the dollar. And the banks don't want to do it because it impacts their bottom line. The banks don't want to do it because they want to continue to take advantage of us. Every penny matters. It does. If you grew up how I did, doesn't matter that how bad the US dollar is devalued. We still want to be able to make as much as we can and stack. And the fact that we're not able to, but we are forced to use a service, it's a monopoly, and it's a predatory monopoly, and it continues to perpetuate hate in the United States of America and increase the social issues that are already here. That wouldn't be that such a big deal if we had equal access to wealth, and that's what the problem is. No one's saying we don't want to be governed. We are saying we want some sort of, give us a little something. Hell, give us that $50 a year, $100 a year, whatever it is. Let me decide what works best for me and my family. We talk a lot about capitalism on the show. I'm not a fan of corporate capitalism, but I am a fan of regular capitalism. I want to be able to pick what bank or what financial entity suits my needs the best. I want to have a choice. This is America. It's supposed to be a free country. I shouldn't be forced to bank with company X. Allow capitalism to come in so that company Y can give me a little bit extra. And I can go there. And then that forces company X to continue to do better. It's like the pizza narrative. There's two pizza parlors. One only serves cheese. One serves cheese and pepperoni. So pepperoni and cheese is like, you know what? We're going to keep adding more. Or excuse me, pepperoni or cheese places like, oh, they got 2 flavors. Let's go ahead and add 3 flavors. And then back and forth. And then you get more access. And then you get a better choice. Then you get better products and services, because with AI coming, they're taking everything. And you're not going to have a choice. This is what it is. This is what it is. It's the bare minimum. And again, these people, we are paying their salaries. All of them. You know, we talked about what Brad Garlinghouse said about it. Clarity over chaos, because it doesn't directly impact you. It doesn't impact your family. It doesn't impact your business, because you are servicing institutions, and that's not a bad thing, but it's the truth. This is from David Sachs, the crypto and AI czar.
A good compromise is everyone leaves a little bit unhappy, right? But I think what's going to happen is that after market structure passes, the banks are going to get fully into the crypto industry. So we're not going to have a separate banking industry and crypto industry. It's going to be one digital assets industry. And I think
will they be regulated
their opinions are going to evolve over time. And I bet you, over time, the banks like the idea of paying yield because they're going to be in the stablecoin business.
But will they also be regulated the same way? And I guess that's a big, I mean, the banks will say, hey, if they get to do all the same things we do, how come they don't get regulated the same way?
Well, I guess because they're offering slightly different products, right?
I absolutely love David Sachs for saying this. Love it. Banks are eventually going to get involved in crypto, and they're going to like the idea of yield. So why stop it now? And again, when we talk about the regulation between crypto exchanges and banks, yes, banks have a lot more disclosures to do, and they've got a lot more to do because they manage so much more, because they hold our livelihood. But if you really, really, really look how banks operate, it's incredibly unfair and it's incredibly predatory. And they still practice redlining and other things, but they do it in a different way. They do it to retail investors, not accredited investors. We got Mr. Warren Davidson here. My legislation would end all of this and require banks to manage their own balance sheets. Real independent banks managing their own balance sheet to get returns rather than essentially manage passive income stream for failing to deploy capital. Growth requires capital. Set it free. And this is in regards to Charles Payne from $300 million a day not to lend to Main Street. So again, and this is the Fed, and we're lending money and we're printing money and we're doing all these things. Banks do need to manage their own balance sheet. And we don't need one central entity like the Federal Reserve to dictate. And that's what's happening now in America. Who do you think is funding not giving yield? And this is a little post from Mr. Mike Novogratz talking about the dynamics of yield. But he says the stablecoin bill are fascinating and might cost the bill. Politics over good policies. Banks don't want crypto platforms to be able to give rewards to users, which is part of the Genius Act. If the bill is killed, status quo is what they seem to fear. I wish a bank CEO could explain that logic to me. So his take over here, he's kind of trying to explain it to everybody else, what's going on, because everybody's like so up in arms about the yield. But it's more than just the yield. It really is. It's about putting baby in a corner. That's what it is. Really quickly, let me check the chats over here. Make sure I'm giving everybody attention. Sorry, you guys. There's a lot to cover today. Shout out to Lawrence. Thank you so much. Lawrence, we have those all over the place for no financial advice. They're down below in the disclaimer, but thank you. Thank you for the $10 super chat. Shout out to Larry for becoming an O-Army member. Thank you so much. Thanks for having you. For you being here. Let's see what else is going on. All right. Now, more stuff. Did I do the damn thing? Yes, I did the damn thing. All right, more stuff. Sorry, there's lots to talk about today, guys. And I'm going to make a little wrap-up video. This is an interesting post from Mr. Eric Trump. I'm actually going to pull it up on my page here because mine is better because I gave better commentary over here. Let's see.
The big banks have been an absolute monopoly over our financial system for years. You and I have joked about it 1,000 times. Why can't you send a wire transfer past 5 o'clock on a Friday afternoon? You know why? Because the big banks would love to take hundreds of billions of dollars and have it sit there and clip interest off of it over the course of a long weekend, as opposed to letting you just efficiently move that money using modern day technology.
So he's talking about, because banks have bankers, we call them bankers hours. It's basically when you can go into a bank, when you can do business, when you want to send a wire, when you want to send money. And he's saying that the reason why banks have these after hours, the bankers hours, is because people are sending hundreds of millions of dollars or whatever that is overseas or wherever they're sending it, and the banks are not legally liable to process it. So they basically hold on to it, and they are earning interest and yield on it, which again is our money. So not only are they screwing us with not paying us a little bit of yield when the money's sitting in our accounts, our money, but with these remittances, they're holding on to that and earn a little bit of extra yield, some reward, some interest over the weekend. And my problem with him saying that, because again, him and his family have been debanked after they've profited extensively on crypto, but why aren't you speaking out about the yield issue? That's what I want to know, because that impacts Americans. And I'm telling you, some of you might be laughing at me at my $33.77 of interest that I earn. But that's a lot of money to some people. It is. When you have to pick between feeding your kids or feeding your elderly parents or feeding yourself, $30 is a lot of money. That's like 20 things from the Dollar Tree today. And that's how I grew up. Counting every single penny and every single dollar. If the banks are able to profit off of you, profit off of us, we should also be able to get some sort of reward. It is important and it does matter. But I really appreciate that all these points are being brought up so we can clearly see. So we can hold these people accountable. And that's a great thing about social media. At least X is. Now, basically, a quick sum. This is from Brian Armstrong again. It just says, basically, this is what happened with the Clarity Act. He's kind of just reevaluating it over here. Basically says the current focus is on the market structure bill. Coinbase reviewed the draft text and identified serious issues that needed addressing. He said they spoke out to defend customer rights, not dictate Senate actions. He said that the markup delay created an opportunity to work with the bank CEOs for a win-win outcome. And this is why he's in Davos. This is why it wasn't pushed through, because they're all sitting in Davos and they're all chilling. But there's one thing I want to let you guys hear that he says. It's very, very, very important.
Tell us what happened exactly last week.
Yeah, so last year we got the Genius Act passed. That was a great piece of legislation for crypto. And now what everyone's working on is called market structure, right, the non-stablecoin crypto assets. And there's been a ton of hard work. The Senate has been amazing to work with. There's a lot of constituents coming in to offer their opinion, including the crypto industry. And of course, Coinbase has a point of view, although we don't represent the
Coinbase has a point of view, but we do not represent the crypto industry. Coinbase has a point of view, but we do not represent the crypto industry. What does that mean? Well, it means that we have a point of view because it impacts our bottom line, but we really don't care about our customers, and we really don't care about the people in the crypto industry that help us become the #1 exchange in the United States of America. We don't care, or we don't care about their opinion on yield. We don't care that they helped us become where we are. We don't care that they're our customers. I understand that he has to say legally we don't represent the entire crypto industry. Fine, but to me, that's what that says. And I think that's why they have the stand with crypto, which I've done a couple events with them and whatnot. But at the same time, Why don't they have the stand with crypto people that are advocating for retail? Advocating on behalf of the crypto community. That's all. Make sure to smash the like and share this. Thank you so much. This right here is about fractional reserve lending. So let's listen to Mr. Bryan talk about it.
We do not do fractional reserve lending, which means, for those who don't know, at a bank you deposit your funds. They're not keeping your money there. They're actually lending it out and earning interest on that, and then they pay you a very small percentage of that. Like the average savings account makes like 14 basis points or something. And that's called net interest margin, and that's the whole bank business model. And so that's why they have such high regulatory burden, because there can be a run on the bank. Like your money is not all there. In a crypto world, there's a 100% reserve. So all your money is there. It eliminates this entire category of risk around a bank run. We do not.
And this is incredibly important what he says over here about fractional reserve banking, okay? Again, banks are banks force us to deposit society forces us to deposit our money. Banks don't have to they have to hold zero reserves. Crypto exchanges are actually held in stablecoins. Stablecoins and crypto exchanges are held to higher standards than the US dollar and then the banks. Banks then take that money and then they loan it out. And if they lose it, who pays for it? We do, because we don't get our money back. Oh, you might be saying, well, Wendy, we have FDIC insurance. Great, fine, fantastic. Tell me that people that have more wealth than me, that are special buddies with the banks, that they're not going to get reimbursed first. Tell me that, please, because they will. Everybody's going to help their friends out before they help the underdogs. That's just how it works. But again, when the banks are pissed off because they're actually going, because maybe they're not being honest about their balance sheets, and maybe they're not being honest about their practices. Scary stuff, really, when you think about it. Here he's talking about, we're seeing the new birth of the monetary system, the Bitcoin standard, and people are kind of praising him for this, and, great. Fine. Why does this keep not pausing? I have to take that off. So basically he's talking about, crypto and or Bitcoin and the Bitcoin standard and blah, 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 blah. Great, fine, fantastic. He owned them over there. But he kind of talked about the, fiat base since 1971, when the U.S. left the gold standard, and that fiat currencies cause inflations because government runs deficits because they run business. But Bitcoin doesn't do that because it's sound money and inflation resistant, and he's right. And that's why I hold mostly Bitcoin. Well, I've got it in investment accounts with financial advisors all over the place. But that's why it's so important as opposed to altcoins. Altcoins are great because you use that money to buy more Bitcoin or whatever it is you want to do. I don't know. But he did well there. And now we got some stuff with Ripple. Okay, so in this point over here, she's talking about the industrialization of crypto. She said that 2026 marks crypto's production era. Real-world utility and institutional scale adoption will replace speculation. But we don't have a lot of crypto companies that have been able to give real-world utility because they've been halted, which is why the Clarity Act or the crypto market structure, once done, it's going to really help a lot. We could get another boom in the USA, get that altcoin season. But right now, everything is about the institutions and stablecoins. She also goes on to say stablecoins will become a core global settlement infrastructure, and crypto will become financial operating infrastructure. 50% of Fortune 500 firms will hold or use on-chain assets. Everybody is going to use on-chain assets because it's faster, it's cheaper. There is a middleman, but it's going to be a little bit different, and it just makes the world work better. Really quickly, we'll do this later. We'll do that later. Binance will list rlusd, and this is actually a pretty big one over here. Really, really, really big one. And the reason why this is a big one over here is because people are slamming rlusd for quite some time, and Binance is actually listing it. So if Binance is listing rlusd as a stablecoin, along with some of the other stablecoin giants, it's a pretty big deal. And this also impacts Ethereum in a positive aspect and XRPL, because that's what it's built on. So that kind of speaks volumes over here. It does. Now, this is from Mr. Nate G, and he's talking about tokenized assets by blockchain. And he says 65% are on Ethereum. This is from BlackRock. This is a pretty good summary over here. And this is why we talk a lot about Ethereum, because Ethereum, not only do I hold Ethereum, I hold most of the stuff on here. But Ethereum is Wall Street's chosen one right now. And I do think Solana has an opportunity to essentially disrupt that, but it's going to take some time. But 65% of tokenized assets are currently on Ethereum. And that's why Ripple chose to put rlusd on Ethereum and XRPL, because they're smart. Now, as far as the crypto market goes right now, there's not too much to really cover. Things are kind of doing what they're doing. We also got a really gnarly drop yesterday with Bitcoin. I think 1.4 was there. Yeah, the stock market was not doing good yesterday, any way, shape, or form. Bitcoin dropped to 87,000. We're gonna kiss on to about 80 to about 86, 87. That's support over here. Altcoins are not looking super great. We won't really go through these because there's not like a lot to look at. But again, as far as liquidations go in crypto, in the last 24 hours, $800 million was liquidated, mostly long, because a lot of people are betting on the markets and betting on what's happening with Davos, and then numbers going down. I anticipate there's going to be quite a bit of volatility until we get some sort of more clarity on the Clarity Act or the crypto market structure, which is important, very, very important. Also, too, I love Polymarket. 150, what is this? 150 million has been eliminated. Is that trillion? Or, I don't know. I can't see. But a lot of money has been eliminated from the crypto markets today. And again, we saw over here on the little thingamabobber, all the different liquidations, and a lot of these are longs. This is why I'm just primarily holding right now. It makes sense to me. It makes me feel good because I don't have to deal with all this craziness. But yeah, things are getting a little bit excited. And I'm reading the chat. I'm doing the best I can. I'm doing good. I'm very overstimulated from all this stuff in Davos, and it doesn't end until the 23rd. So I'm gonna be busy. I'm tired. We do the thing. We get up and we show up every single day because that's what we do. But on another note, outside of everything being liquidated and whatnot, our partners over at Hyperware, they have a bit of an announcement. So shout out. Let me calm down a little bit. Shout out to Hyperware for being a partner of the O Show, everything crypto every single day. Thank you guys so much. All their links are going to be down below. And we've talked about them before. I've held a space with them too. And I really was able to ask all the developers and everybody that's a part, most of the people that are part of the team, different questions, because this is an AI project and they are focused on AI and privacy, which are both really big narratives that will be coming once people can do more things in the USA. But they are a decentralized operating system and crypto app framework and is built on Base, which is part of Ethereum. RWAs, we just kind of covered that, seeing how much tokenization is currently on Ethereum. So it's smart that they put themselves on Base. But they are focused on privacy and AI, and the devs can build Web3 privately without going through third parties, which again is important because we want to be able to have some sort of decentralization. The hashtag HYPR token is a gateway to the Hyperware ecosystem, and users can earn rewards by locking the token to participate in the DAO governance. HyperDAO claims are now live. If you want to get involved, follow them in X. Join the not only follow them on X, but really join their Discord and all the different socials they have and ask questions, because they are doing some really cool stuff. Not only is it decentralized apps you can build, AI and privacy, but again, they're doing really, really great stuff, and they make it easy so that you can participate in AI, because AI is still being built out. And for someone that's not tech savvy like myself, it definitely helps. Now, this came out from Michael Slegg yesterday on the 20th, and this is important. He says, because he is the new chairman of the CFTC, and they're still going through CFTC and SEC, but this is important. He says that the U.S. financial markets are entering a golden age driven by tech and innovation, and credits Trump and Congress for advancing the Clarity Act, which he's not wrong. We're just pissed off about the yield. He criticizes the Biden administration's regulation by enforcement, which anybody should. CFTC will shift to clear, tailored, pro-innovation rules instead of legacy framework. A new future-proof innovative initiative will modernize outdated regulations to support digital assets, prediction markets, and emerging technologies. The goal is to make the U.S. a global leader in the crypto and next generation financial markets while still protecting users. And I like this take. And the reason why we're talking about this take, even though no one's really talking about the CFTC because everybody's focused on Davos right now, is because they want to make America great again as far as innovation, but they also are realizing that a lot of the rules and things that were happening in the previous administration was predatory. So they're trying to make it to where people can build in the USA and where consumers can consume in a safe manner. And there is a happy medium there. There is. We just need to respectfully demand for it. And we need to remember who works for us. Public servants do. He works for us. Trump works for us. They're all supposed to work for us. This over here, this one is another big one. Now, Trump signs an executive order to restrict Wall Street investors from buying single-family homes. This is an incredible, big story, okay? One of the problems we have with the housing market is we have these big corporations that come in and they buy up the properties. There is actually a home that sold near me, I want to say about 2 years ago. And they redid it, because I drive by it on the way to get my kid and, run my errands and stuff. But it was empty for almost a year after they finished remodeling it. And a problem is there's a lot of properties being bought that are just that they buy them, they hold on to them for whatever reason it is, and and people are not able to rent them. And that's a problem. And again, I wish they would sign an executive order to make 2% or 3% interest rates for all single family homes as a primary residence. I think that would help a lot. But this is a step in the right direction. And I like this by him. I really, really do. A lot of the other stuff that he's been saying, I don't really know what's going on with Japan or with Greenland or Canada or whatever the heck, or what's going on in Venezuela now. But there's stuff happening. And moral of the story is that this is a good thing that he did. I don't like that his family's profited so much on crypto when they haven't released the Samurai Wallet devs, when they haven't dropped the issues with Tornado Cash devs, and that there's this issue with the yield with the banks. I don't like that. I don't. But I do like this. And Wall Street investors shouldn't be buying single family homes. People need to. Families should. This is really funny. I just wanted to bring this up. And I love that Scott Bessent, the U.S. Secretary of Treasury, was talking about Mr. Newsom, because Mr. Newsom, my governor, he's over in Davos right now. He's over in Davos. And it's funny because it's not only is Bessent, part of the pro-crypto administration, but just some stuff about his personal life that pops up on the internet you guys can see, but just what he's talked about, how he's referred to Gavin Newsom, which I think is hilarious because you guys know how I feel about Gavin Newsom and all the predatory practices and things that he's done. Again, I'm born and raised in California, so I could speak on it. I'm not a transplant. And I'm just hoping that we get some sort of positive change here. My buddy Ian Calderon is running for governor of California. And I hope whoever we get is not laundering our taxpayer funds to go to fancy places, but more so that we do get somebody that's pro-crypto here. I've seen a lot of talk about, all the different fraud that's happening all over the place, and blockchain technology fixes this. It fixes this for the voter issue, and it fixes this for public service spending, for government spending. So there's that. But anyway, shout out to Hyperware for partnering with the O Show, everything crypto every single day. Shout out to you guys. I got to work on the second media piece for you. And then make sure to watch the third media piece that drops at 6 p.m. PT, because I give you a complete news wrap up in under 3 minutes. And if you miss the live stream, because I know I yap, that'll help you understand kind of what's going on. Shout out to Kenny for the $10 super chat. Thank you so much. Yeah, Gavin Newsom, daddy, him and his sugar daddy were in... they were in Davos, because why not? All right, you guys, I gotta get going. I gotta do my work. Sending y'all love and light. Thank you so much and all the new subscribers, thank you for rocking with me. I'll chat with you guys soon. Bye, babies.